Welcome back. You're watching Market Fatafat right here on 18-hour show where we get you all the stocks buzzing on news flow as well as on technicals. And shortly on the technicals, we'll also have Nirav Chheda joining us on the show. But before that, let me talk about Mankind Pharma. And remember, Mankind Pharma has been a buzz of late. A lot of brokerages are taking note of this particular counter. And today you have not have one, but you have two notes coming in on Mankind Pharma. First one is coming in from Axis Capital. They've initiated a cover on Mankind Pharma with a recommendation of a buy. They've set a target price of 1,750 rupees per share, which implied about 15% increase from yesterday's closing price. And not just Axis Capital, you also have IIFL, which has initiated a coverage on Mankind Pharma with a buy rating, and their target is about 1,715 rupees per share. So yes, you have a lot of brokerages taking note of Mankind Pharma off late, and as you can see it on your screen, that particular counter is soaring in trade. 4% uptick coming in, almost 4% uptick coming in for Mankind Pharma. Brokerages are initiating coverage with a buy rating.
Okay, let's move on and talk about the next stock, and that is Zydus Lifesciences. Why have you picked out this one for us today? What's the news for you?
Well, yes, this counter is in focus on the back of some US FDA action. In fact, the stock is sitting on with gains of nearly 2.5%. Yesterday, the company informed the exchanges that Group's injectables manufacturing facility, which is located in Ahmedabad, underwent some US FDA inspection. This inspection was conducted between the 5th of June and 13th of June, and the inspection has been completed with zero observations. So some positive commentary coming in over there with respect to US FDA inspection, and that is the reason the stock is buzzing in trade today. It is at the moment at the highest point of the day, sitting on with gains of over 2.5%.
Okay, that's Zydus Life for you all. But keeping on the pharma side, we have Sun Pharma, Cipla, actually all the pharma names that are in focus, because we have a data that has come in, that is a IMP data which has come in, which is showing encouraging signs in terms of volumes as well. Now, Kotak Institution has said that Sun Pharma and Cipla are among their top picks. Now, let me just take you through what the data points have come in. That is that post 3 successive months of strong growth, the IMP growth in the month of May has remained healthy at 9.6% YOY. Importantly, the volume in MAT in May 23 was strong at 3.5% as well. On a 4-year basis, IMP reported a 9.3% sales CAGR in May, and they expect the coverage companies to report 19 to 14% domestic sales CAGRs over the period of next 2 years. That's at 23 to 25 estimates as well. Largely going to be driven by pricing as well as new launches. Even an increased stability in the US generics is a respite, and a sustained momentum in domestic sales is critical to drive the overall growth for the formulation coverage. So that's why they're positive on Sun Pharma and Cipla specifically, and that remains the top bet in the pharma space. As of now, not doing anything exciting in trade, but yes, the data point clearly shows strong growth.
Alright, moving on, Harsh, let's talk about Zee Entertainment, and this one has been in news of late for various reasons. And today's what's the news flow?
Well, yes, I'll ignore the news flow from yesterday, but today what we've gotten to know that Plutus Wealth has actually purchased 75 lakh shares in Zee Entertainment. Now, mind you, Zee Entertainment has a market free flow or a total market cap in terms of number of shares of around 96 crores. So around 0.8% stake bought in by Plutus Wealth straight off the market yesterday. So that's very solid volume that they have picked up in terms of quantity. Also, we have top stockholders among DIIs outside of Plutus Wealth. We also have ICICI Pru Life, which holds around 8%, Life Insurance Corporation, which holds above 5% stake. We have HDFC as well as Nippon, both holding 4.5 to 5% odd stake in Zee. So at the moment, Zee in focus, stock is up 1.3%, and Plutus Wealth has bought those shares.
Okay, let's keep an eye on Zee. But moving on, we also have Metro Brands. That one is in focus. Today we have a brokerage note that has come in from Motilal Oswal. They're given a target price of 1,100 rupees per share, and they have reiterated a buy. They believe that the company has consistently been reporting healthy double-digit revenue as well as profit growth over the last 10 years, and in the near term they expect the risk of growth moderation, losses in FILA as well as the moderation in margins to pull down in terms of the estimates for profits by 8%. But the management stock guidance, however, has increased 200 from earlier 80 store guidance, which they had given for 80 stores. Now, the company's ability to run an efficient retail network and its size is being one-third that of Bata actually provides Metro Brands a huge opportunity in terms of store expansion as well. And Motilal Oswal is highlighting that Metro enjoys a ROIC of around 20%, led by efficient working capital, store economics, healthy growth outlook, and that's why the revenue CAGR is at 24% and 23% respectively for the period of next 2 years.
Alright, moving on, let's talk about Ipca Labs. Yes, a lot of pharma companies are in focus in today's trading session, but for Ipca Labs, the news flow is not that much of a positive one. At one point in time, you saw the stock actually fall as much as 3%, biggest intraday drop since April 26. And the reason for that is that the company said the US FDA has issued 11 observations at the conclusion of the inspection at Ipca's manufacturing facility in Madhya Pradesh. They've said that they will submit response on the observations to US FDA and will work with the agency to resolve the issues at the earliest. So that's the reason why you have Ipca that is in focus in today's trading session.
Okay, let's move on and welcome on board our technical analyst for now. And we have Nirav Chheda joining in with us. Nirav, a very good afternoon to you. And the first stock that you've picked out for us on the charts is L&T Housing Finance. What are the chart patterns forming for this one? What is the target that you're keeping on this?
Yeah, hi everyone. Thank you for having me. And sorry, there's some technical snag. L&T Finance, see a super pattern. A 5-year breakout had come in the stock around the 85-90 odd levels, and post that a retest happened of the breakout, and then the stock has gone up. Very, very importantly, a V-shaped recovery is in place. A very important resistance has been broken above, which was 108, and now I feel this stock can run up quite significantly. It can move up towards that 130, 135 odd levels, and very quickly at that, everything is in place at this point of time for this stock. So look to buy the stock at current levels. You can keep a stop loss of around 105 for your longs, and that target of around 130, 135 can come.
Okay, let's move on then to stock number 28 for today, and Ashesha, SBI Cards. What's the news for you?
Well, yes, this counter is in focus on the back of a brokerage note. Jefferies, in fact, has come out with a note where they are maintaining their buy stance on the stock, but they've gone ahead and increased their target price to 1100 from their earlier target price of 925 rupees per share. They say SBI Cards is amongst their top picks in the NBFC space. Industry card spending growth continues to remain healthy despite UPI growth that we have seen over the last couple of years. Strong spending in card net adds to the positive outlook that they have on SBI Cards. They say credit costs are expected to remain elevated in the near term, but over a period of time they are expected to normalize. As far as profitability is concerned, they expect profits to grow at a CAGR of 26% over the period of FY23 to 25, and ROE they believe could expand FY24 onwards. So positive commentary coming in over there from Jefferies, where they are maintaining their buy stance on the stock, and they've increased their target price to 1100, on the back of which the stock is in focus today. It was trading in the green earlier in the day, but has now slipped into the red.
Okay, that's SBI Cards for you all. But Nirav, Metropolis on the charts, what is the target that we should keep, and is it a buy call?
Yeah, it's a buy call. See, a long time, this stock has been falling from 35 odd, 100 odd levels. This stock is falling from 2021 onwards. I believe this stock is now making a base. Very good base formation has been done around that 1200, 1250 odd levels. Volumes have gone in, and now it is ready to move up, to a newer range. So look to buy this stock from, that 15-20 day perspective. I believe a good up move will come in where, 1500, 1550 will be reached for this stock. And, the downside is very minimal. So you can keep a stop loss of around 1260 for your longs, and, expect that 1500, 1550 levels to come soon.
Okay. Harsh, stock number 30, we have Precall. What's the view on this one? What's the news flow? I beg your pardon on this one. Why is this one in focus?
Well, yes, absolutely, Vinny. So we're seeing, we as background, Minda had tried to take over Precall. It continues to own 15% plus of Precall, but Precall the management as well as the promoter entities have started to buy stake in Pricol Limited, and they continue to consolidate stake in Pricol Limited. So we had buying happening yesterday as well, around 0.6% in terms of the, or rather 0.6% of the total market cap of the company being bought up by two entities, Pricol Engineering as well as Pricol Logistics. Those are the two entities which have been consistently buying stock. We saw that in the first week of June as well, around 2% being bought by both these entities. So a further 0.6% added by these two entities in Pricol Limited as they try to fend off that hostile takeover of sorts that is being that is underway at the moment. So on the back of that, you can see some positive action on the stock in trade today as well, 1.5% higher.
Okay, let's move on to the next stock. That actually we'll pull up HDFC and HDFC Bank because we have a news flow and you can see it flashing on your screens that SBI is actually SEBI, I beg your pardon. SEBI is unlikely to give mutual fund waiver on investment caps post HDFC and HDFC Bank's merger. They are considering a breach of 10% cap in the merged company as a passive breach to be corrected in 30 days. So that's the update that currently we are getting in, that SEBI is unlikely to give mutual funds waiver on investment caps post the HDFC and HDFC Bank merger that we've seen coming in as well. Cheryl, I believe you have some more details on this one as well.
One thing is very key to note. This is a source-based information that we are getting from Wire Agency, that SEBI is unlikely to give special exemption to mutual funds if they breach the norms for maximum permitted holdings in a security after the merger of HDFC Bank and HDFC. What they are saying is, remember that HDFC Bank and HDFC both are heavily owned by mutual funds, and they are set to conclude a merger in the next few weeks. So this is as per the rules what it is, that SEBI, as per the rules of SEBI, a mutual fund scheme cannot invest more than 10% in a single security. However, ETFs and funds that invest in particular sectors are exempt. So this is what the sources have told Wire Agency. Also, SEBI could consider this overshoot as a passive breach, implying no deliberate attempt to flout rules. That's one of the sources inform the agency.
And let's not forget, both of them are actually, a lot of that were owned by mutual funds as well, heavily owned by mutual funds as well. So that's going to be a key factor that one should keep an eye out on, especially in terms of these factors coming into play, and obviously that cap coming in there as well. But that's the update on HDFC and HDFC Bank, the merger, and more update coming in. And this is as per sources that we are giving all information. Let's move on now and talk about Oracle Finance on the charts. Nirav, what's the update on this one in terms of the charts and target price that you're keeping on this?
Beautiful breakout has come in this stock. A big downside had already come in, and post that, this stock is now witnessing buying, which is a very good sign. Very important breakout, 3740. Has been got yesterday, and the stock is sustaining above the same. On the longer term charts, it's a rounding pattern, which is also a very strong pattern. So I believe this stock is headed higher. It can move up towards 4200 to 4500 odd levels. So look to buy this stock at current levels. You can keep a stop loss of around 3740 for your longs, and expect those targets to come.
Okay, keep an eye out on those targets for Oracle Software Finances. But moving on to the next one, and we have CDSL. That one is in focus. And when you look at the stock price, it fell as much as 4% today in trade as well. We are, as of now, also seeing a decline of 2.37% in trade. Now, this is after 56 lakh shares worth around 558 crores were changed in hands that we saw coming in this morning. The buyer and seller of the block representing 5.4% stake were not out immediately and are still not known. But that is what we'll be watching out for in the evening. What are the names that are coming out as well? Who's the seller? Who's the buyer of this as well? But clear pressure that has coming on CDSL post the bulk deal, block deal that we've seen happening this morning. Keep an eye out on it. As of now, trading with a decline of 2.3% in trade share.
All right, that's CDSL. We'll get more details on the buyers and the sellers in the evening. But Nirav, Caplin Homes, how is this one looking on the charts to you?
It looks very good. See, this stock has got a breakout after 5-6 years. 2017 it made a the last stock which was around that 700 odd levels, and post that, breakout has come in. So this is a strong breakout. You're also seeing a lot of buying the sector stocks, finance sector stocks. So I definitely believe this stock can move up quite significantly. It is just starting out. This stock can move up towards 840, 850 very soon, probably in the next few days itself. So look to buy this stock at current levels. You can keep a small stop loss of around 720 for your longs on a closing basis, and ride the trend at this point of time.
All right, moving on, let's talk about Fiem Industries. And why is this one in focus? Because there was a fire that broke out yesterday in the noon in one of the buildings of Unit 7 that was situated at Sonipat in Haryana. However, the company did say that there was no loss or injury to human life, though the damage has happened to some of the building, plant and machinery stocks as well. The company, however, is in the process of ascertaining the loss caused by the fire and already has initiated necessary procedures for insurance claim, as company's assets are adequately covered by insurance. Company is also in process of arranging supply to its esteemed OEM customers from other building in the same unit as well as from other units for avoiding any disruptions in the supply to the OEM customers. Apart from that, the company will also take adequate and swift measures to ensure refunctioning of the affected parts of the unit at the earliest. So on back of that, you have Fiem Industries that is in focus. Yes, yesterday also the stock was under pressure. Today, right now, it has recovered from the day's lowest point.
Okay, recovered from the day's lowest point, but yes, down 1% in trade. Let's move on and talk about Nalco on the charts, Nirav. What is the indication that you're getting in? Because it's been quite subdued when you look at it in terms of performance coming in. Nothing great in terms of return. Yes, it's been positive side, but nothing exciting. Finally, could we expect a good up move and a sharp rally for Nalco?
Oh yes, most likely, this rally is going to come in. See, there was some positive news for metals yesterday, but looking at the chart, most of the metal names are ready for a breakout. So be it Tata Steel, SAIL, the others, and National Aluminium as well. So National Aluminium, for the longest time has consolidated in between 80 and 70, 75 odd levels on the downside. Finally, a breakout has come in this stock, not on a on a weekly closing basis, but yes, a breakout already is in place. So definitely, I believe this stock can move higher. It can move up towards the 9500 levels, and that too very soon. So look to buy this stock at current levels. The stop loss for the same would be around 80. Also, one thing to note is, a lot of shorts were built in metals, which got covered. So it was the same with Nalco. Shorts have been covered, and there is likely to be good long addition now going forward.
All right, moving on, Len. Shesha, Tata Chem, why is this one in focus?
Well, yes, this one is in focus on the back of price cuts that the company had announced. Yesterday, of course, we had Nirma, which cut soda ash prices. And now Tata Chemicals has also gone ahead and undertaken steeper price cuts. In fact, Nirma cut prices by about 2,000 rupees per metric ton, while Tata Chemical has cut prices by about 2,300 rupees per metric ton. This is the largest price cut that the company has undertaken since November 2022. And remember, this is the third price cut that the company has undertaken in this financial year itself. We have some brokerage notes that have come in where analysts believe that reduction in soda ash prices may signify some kind of price wars that has been happening in the industry. Sharp correction in soda ash prices saw a decline of about 5% on a quarter-on-quarter basis in the first quarter. And despite easing raw material costs that we have seen, analysts believe that margins will compress in the coming quarter. So negative news flow coming in where companies have gone ahead and cut soda ash prices, and that is the reason Tata Chemicals is in focus today.
All right, so that's Tata Chemicals, and that's the reason why it's in focus in today's trading session. Nirav, not one but two OMCs, HPCL, BPCL, identical charts, is it?
Oh yes, in fact I was going to put in IOC as well, but I believe
no, we have no problem.
I believe all three have broken out. They were consolidating from the last 1.5-2 years. In fact, selling had come in, but now is the time for OMCs. consolidation period is over. Shorts have been covered. Volumes have started to grow and breakouts have come in all three of the stocks. So BPCL 365 was the breakout level which has come in. For HPCL around 270 was the breakout level. Similar is for IOC as well, where the breakout level has come in at 90 odd levels. So I believe there can be a reasonable upside from current levels for all three. I believe IOC can reach about 110, 115 odd levels. BPCL, I believe 420, 425 odd levels can come in very soon. You can keep a stop loss of around 365 for your longs in BPCL. Same is the case for HPCL. I believe you can keep a stop loss of 265 and expect anywhere in between 310, 315 odd levels to come in. All these levels should come in, in due course, but definitely aggressive buying will go on in the next few days. So do ride the trend.
Okay, do ride the trend is what Nirav is saying, and what Cheryl said, OMCs will say apna time aa gaya is what is the word coming in there. But keep an eye out on those OMCs, the levels that Nirav mentioned for HPCL, BPCL as well as IOC. Moving on to the next one, and Canara Bank is what you've picked out for us, Harsh. Why is this one in focus?
Well, yes, Vinny, both Canara Bank as well as Tata Chemicals are also in focus because they go ex-dividend today. I mean, this is a large dividend distribution that both these companies are making. Let me take you through that. So firstly, Canara Bank, 12 bucks a share is what they've declared in terms of dividend. The stock up roughly by around 10, down roughly by around 10 rupees or so. So adjusting for that dividend, honestly, nothing else in terms of a negative coming there. Tata Chemicals, we did have Ashesha talk a little bit about what's happening there, but it's also going ex-dividend. 17.5 rupees a share is the dividend declared by Tata Chemicals, currently trading down by around 20 to 25 odd rupees. So the stock really adjusting for the dividend play as well, along with, of course, some of the negatives starting to get priced in with regard to pricing. So on the back of that, we have both these stocks, both these counters lower in trade today.
All right, moving on. Nirav, how is Axis Bank looking on the charts to you? Do you think that this will make a comeback?
Oh yes, in fact it's not a comeback, it's a breakout. Even though it is down today, this stock is definitely going up, it seems, on the charts. Beautiful breakout has come in. It had made a high of around 950 or post breakout of 820, sometime in 2022 October. Post that, the breakout was retested at 820 odd levels, and then 850 odd levels, and then stock has shot up. I believe this stock is ready now for higher levels up to 1040, 1060 odd. One can look to buy the stock at current levels. It's a good level to buy at. You can keep a small stop loss of around 960 for your longs, and expect that 1040 to come very soon.
Expect that 1040 to come very soon. Let's keep an eye out on that. But moving on, we have Hiranba, which is in focus as well. We saw the stock was in focus. It was buzzing in trade. Why? Because what we saw coming in this morning was that the Gujarat Pollution Control Board has revoked its closure order for the company's facilities in Vapi. The Gujarat Pollution Control Board on May 22nd had ordered the operations to be shut at the company's Vapi plant Unit 1 and 2 for violation of pollution norms. So now that has been revoked. On the back of that, we saw the stock buzzing as much as 16% on trade today as well. Intraday, as of now, also still holding on to gains of almost 12%.
All right, so that was Hiranba, that is in focus, soaring in trade, and that indeed was the last stock on this edition of Market Fatafat. So thank you so much, Nirav, Ashesha, Harsh, as well as Sumit, for joining us on the show and taking our viewers to all the buzzing stocks. And with that, it's a goodbye for Vinny, myself, and the team that put the show together. Stay tuned. Closing trades coming up next.